Hey y'all, Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for Monday, the 6th of July, 2020 at about 5:05 p.m. Central Time. Folks, I'm due to get a haircut this week. Had to make an appointment to do it, obviously, and you can't just walk in. It's not working that way. You got to make an appointment. Most of the salons really aren't open that I would frequent. And I was down today by the Board of Trade for a few minutes. Did not go in the building, but I had to be in the area to pick up something. And as I'm there, there's nobody out. It's still very much a ghost town. I stopped into one of the eateries I like, and this was noon. And I said, "Where's everybody?" They go, You're it. And I said, "Who's here?" Me. That's not right. And this is a nice eatery. All right, as we take a look, a big rally in the stock market. You know that happened overnight, obviously out of China. And that's one of the things you always have to deal with. When we have a holiday in America and that holiday's not celebrated in Asia or Europe, if they get something going, we become, if you will, the pony that chases along with the rest of the herd, not the other way around. So today that was basically what was going on as Hong Kong stocks were up, Shanghai was up, China economic data still looking positive. I wouldn't say growing dramatically. I think they're hitting some bumps in the road. We're hitting very good numbers in America, but look where we're coming from. We're coming from a disaster area. So now the question is, will people buy tomorrow morning when we see the Red Book numbers and so on? Are they going to get any better? I don't know. In the gold, we got up today near the $1,800 an ounce area. The market flirted a lot with losing the embedded reading. It kept it by the end of the day, so that was a rough one. Energy markets sort of drifting, as you saw. Warren Buffett stepped in and bought a major company. So if people think he's just riding this out, no, he spent $10 billion. I don't know to him what that is, but to us it's unfathomable. But look where he went. He's not in the airline area. He went back to energy. Very interesting, buying assets in the ground, pipelines and so on. I thought it was a very interesting play. Bonds and notes getting a little bit of a bid. So as we look for the beginning of the week, this is only Monday, we're up $5, and we're certainly sitting here at a nice number at $17.95.60. When we look at the daily bar chart, you can see how the market's working its way higher. The pattern is still one of a higher high and a lower low. There's nothing on this pattern right now that can make it break out to the upside. Could it break out to the downside? Yeah, if it got under 1766.30, you could have lower highs, lower lows, assuming you don't get back over this high. And that high right there, by the way, in case you're interested, was 1807.70 made last week. So we're coming back up, trying to get up to challenge that number. We've stayed over the 18-day average of closes. Now, the importance of that is that I use a word called bias. And bias is a filter on other studies. So if the bias is up, I'm looking for reasons to be long. If the bias is down by the market being under that 18-day average, for technical indicator reasons, not by analysis of fundamentals. Technical indicators to be short. If they don't come together, you don't do anything. So I don't have them together right here. I have a pattern where the swing line is not trending, but the bias is up. Resistance, 1813.70, the upper Bollinger Band. Now, if we come back here, you can see you did hit the Bollinger Band right there. You got through it, in fact, by $2. And did you pull back? You most certainly did. So my analysis is still that the first time you hit a Bollinger Band after getting a correction, I think that's a resistance point, an important one. I will stick with the 1813.70 as important resistance. In terms of momentum, well, you can see the slow stochastics. The numbers are just staying over the 80s. That's embedded. So until the red line closes under 80, the market's embedded. That tells me that on these pullbacks, I expect to see buyers show up, and against the Bollinger Band for them to dump positions. In the gold-silver ratio, we had fought last week against the 18-day average of closes at 97.64, and now the market's under it, which means silver has an upside bias against gold. That means the lower these numbers go, the less amount of ounces of silver you need to get an ounce of gold. And if you look at silver, we're in a sideways channel that keeps trying to get up here and do something. It keeps getting thwarted. It keeps getting thrown back. Until it's not thrown back, I expect that to continue. You're overbought into a resistance area in an uptrend. In the copper market, as long as you have the embedded reading, what am I? Very bullish. So on pullbacks, I continue to look for buying support. Now they're closing down more mines. That is very important. Miners are going out, and this is going to curtail production of copper because of COVID-19. And as that happens in Chile and Peru, it takes time, but it starts impacting the market. And as you can see, the market's knocking on the doors here of new highs for this whole move since March. When we look at the platinum market, I think we're in what I call one of these pipes. Now let me define a pipe. If you look at the black dashed lines, they're called Bollinger Bands. A Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. Eventually you break out of the band and you blow through that 5% of the time you stay out of it. Now how long you stay out of it? Not very long. What it does is it widens the band out. Here was a narrow band. You widened the band out. See what I'm getting at? So you had to get up and over it. You expect that to be part and parcel with it. And that's where you're at. I look for resistance at 842.90. Is there anything here that can spell some trouble? Well, to a degree. You had an outside day up today. So if you take out the low of an outside day up, I look for the market to go to the closest moving average or Bollinger Band, the closest of. Well, in this case, it's the 100-day average, about where you were today. So I don't see a big problem with that one way or the other. In the Palladium, do you not agree that you see just sideways action in a band that just keeps narrowing itself in? From there, you get big moves. Which way? Well, that's what traders will try to figure out. They might go out and buy calls, trying to get the market way out here, or buy puts, but of course they're going to pay premium for that for the time. So sometimes they'll do call spreads, put spreads, trying to figure out which way the market will break out of that and see how they'll have to get out. You know what I don't like about those, and I've always hated them, unless you got a directional one, it's so hard because you can get a move like this and you think you've got a breakout and it turns out to be false and you've screwed up your whole position. I find that when you start complicating things, you screw things up. In the dollar index, I don't think you're disagreeing. Lower highs, lower lows, bear trend. Market today, when it broke through right here, that was the game. And where did you go down to? To the lower Bollinger Band. That number's 96.54. You're back to 96.68. But I do expect to see selling on rallies. I think the pros are getting very bearish on the dollar, looking for, as this COVID ends, for Europe and other currencies to strongly gain against the dollar. I talk about this and a lot more in the afternoons because not all of you like to trade, and I'm aware of it. Futures. You like to see the futures, but then you move into the SPDR or an ETF market, and I get that. You do know that SPDRs, ETFs, the SPDRs are primarily looking at sectors in markets. The ETFs, more times than not, are doing what? They're looking at what the futures did. And because of that, I try to tie this all together for you with that, knowing that we have a big audience that likes those type of markets. We even have a combo where you can get both. Right now I'm covering 35 charts at about 4 in the afternoon on SPDRs and ETFs. I give you the fundamentals, then the technical analysis with specific points of entry and exit. In addition to all that, what I try to do is cover these specific areas for you. And as you can see, if you go to the metal markets, I've got the gold, the silver, the different mining groups there, GDX, XGD, XME. So we give you a little bit of all of them. So if you're a true gold trader and you trade in the others, you might want to look at this. How do you do it? Go to our website, www.iraepstein.com. When you get there, go to the word at the top, research, everything is explained. If you want to sign up for it, you do it right there. I'm Ira. You have a great day, and I'll see you tomorrow.